A 17-year-old getting their own car insurance policy in Minnesota is looking at $4,500 to $6,500 a year. That's before gas, maintenance, registration. But here's the thing. Most families are paying way more than they have to because they're making one specific decision wrong. By the time you finish watching this, you'll know exactly why young drivers cost so much to insure, and more importantly, the 3 decisions that can knock $2,000 to $4,000 off what you're actually going to pay. Let me be direct. 16 to 24-year-olds crash more than any other age group. The data's from NHTSA and the Insurance Institute for Highway Safety, and it's not close. Inexperience, reading the road, slower hazard recognition, phones, impaired driving. Insurance companies price based on actual claim history across millions of policies. In Minnesota specifically, winters make it worse. Ice and snow conditions are unforgiving when you haven't developed the instincts yet. So the high rate isn't punishment, it's actuarial math. What you can do is control the decisions around it. Here's the one thing I see families get wrong every week in my agency. They put the young driver on their own policy thinking it'll be cheaper or cleaner somehow. It does the opposite. When you add a 17-year-old to your existing household policy, you're adding them as an increment to what you're already paying. You've got multi-vehicle discounts, bundle discounts, loyalty discounts already built in. I see typical Minnesota households where adding a teen costs somewhere between $1,400 and $2,000 a year. That same kid on a standalone policy, $4,500 to $6,500. That's a difference of $2,500 to $4,500 a year for the far same coverage. The parent policy stays the right answer until they buy their own house or move out of state. If your kid goes away to college, say to the University of Minnesota or Iowa State, and they're not bringing the car, ask about the student away from home discount. Most carriers knock off 30 to 40% right there. The logic is straightforward. They're not driving in the Twin Cities traffic every day. They're at school. They drive during breaks. The exposure is a fraction of what it would be year round. It's easy to miss because you have to ask for it. But in my experience, families leave hundreds on the table because they don't. The biggest error I see is trying to save the parents money by moving the 19 or 20-year-old to their own policy early. You think you're helping, you're actually costing the family more money and worse coverage because now you've lost all the household discounts. A 21-year-old on a standalone policy is more expensive than keeping them on the parent's policy where they belong. Don't do it. Wait until they actually move out and have their own address. If you've got a young driver in Minnesota, Wisconsin, North Dakota, or any of the states we work in, call us right now at 76373374775.